Hello, today is January 16th, 2016. I had a few calls Thursday night. The first one was that there was a MEJT target of 1886.40, most likely to print by early Tuesday. The price printed on Friday, and that proved to be an excellent support resistance area. It was resistance here, and MEJT prices are always support resistance area. The other prediction I had was that prices would have a gap outside of Thursday's range. Well, when I made the prediction, prices were up here. I did say it was possible in a weak market like this one that we would undercut the low instead of overtake the high. I thought that was pretty much a bridge too far, and I had a scenario printed out if the break were up. A few hours after I made the prediction, prices started to circle the drain, and the only way the prediction could come true would be if we undercut that low. When it's this close, you have to use futures to see if the prediction worked out. The low, I have to get the low, not the close here. The low on Thursday in futures was 1871. And the open in futures on Friday was 1862. So I guess we undercut the low with a gap outside the range after all. Hard as it is to believe, it actually worked. During the day, MEJT said this rally was a false move and that prices will retrace to 1865.41, most likely by early Tuesday, most likely by the close on Tuesday. If I had any brains, I would just go along with that, but I'm going to put a lot of qualifiers on that one. I'm not certain it's going to work in regular trading hours. There are actually a number of positive things in the chart. Let's go over them. First of all, we broke through the old August low on the SPX. When that happens, you have to check some other stuff to see what the other indicators have to say. The percentage of stocks with negative patterns clearly diverged. Not as many stocks were taking the indices lower as when it bottomed in August. If you look at the Bollinger lines on the put to call ratio, it goes way over the upper Bollinger. This is the equity only. That tends to be associated with market lows. You'll notice we did not hit a new low in some of the other indices. And we certainly didn't have as large a differential between the new highs and new lows. There are some other things we should point out. After gapping down sharply, we were unable to close below the first drop's low. We couldn't even close under Thursday's low. We have a stilt, we have a diamond, half is enough. If we can break through on the upside, we have a potential for a stilt-like move up. That's a real potential here because this is a pattern which tends to close at the day's low. And when it does not close at the day's low, it tends to lead to higher prices unless we gap under the low at Tuesday's open. The fact that we could not close under the lows of the opening drop also tends to lead to higher prices unless we have a gap open under this low. So what are the chances we're going to have a gap open under that low? Well, let's talk about our previously defined targets. When we broke through this line, we had a target of 1839 plus. Let's go over how we came up with that. Here's the line. DeMark's rules say you take the highest amount over the line, and then you should drop below this line by the same distance you went over it. Let's put that back where it belongs. Well, on the day that we broke through, that was here, you go to about 1839. But this line has been going up all the time, and at Friday's low we went exactly to the target of the move. So we hit the target defined by this drop, and the same rule that says we're going to go that low also says we're going to retrace to this gold line, as I've been saying for a week and a half now. Now, if I'm wrong, we could be in a third wave down, and that could be big trouble. I've seen some pretty heavy hitters call this the end of wave 2, and this is a 1 and a 2, and we're in a third wave down, and we keep on dropping. So how confident are we that wave 2 ends here and not here? Because if that's wave 2, this could be the end of wave 1 of 3, and wave 2 of wave 3 often retraces the lion's share of wave 1 of 3. Well, first of all, I count this as 5 waves up, but you need more than that. I think there are some pretty clear Fibonacci pieces of evidence that this structure is all related. If you go from wave A's low to here's a B, here's the high, you draw your Fibonacci grid, and then you look at wave C. Give me a hard time today. You go to your wave C, and there's your 38.2%, suggesting these are all interrelated. In addition, this should all be part of the same structure rather than 1 and part of 2, because here's wave A, here's an ABC for B, and you'll see wave C is pretty much equal to wave A. And you can see all these nice Fibonacci hits that were nicer when I did it before. Let's try this again. Here are the hits. Right there, right there, right there, right there. It suggests these waves are all interrelated rather than this being wave 1 and this being wave 2. So it's kind of incompatible that we hit 1865.41 and then have a stilt-like move up here, which I think is really possible. One of those things has to give. What I've seen happen in the past is that we hit the MEJT target in futures, which doesn't count but has some relevance, and then when regular trading resumes, we have a stilt-like move up. I think that's very plausible. I can't say it's required, but I think it's plausible. So the call for Tuesday when we reopen is we have a MEJT target. I think it might print in futures, but not in real time. If we do not have a gap under this low, I look for higher prices, and I think that because we had the largest point move of the drop along with the required volume spike and hit the target on the nose, I think that Friday's low could be the low of this move down. that we have a good chance of hitting the gold line here and even this green one here if we get really lucky. And that's today's call.